So we have journal and ledger. Now what is journal and ledger? I'll make a sale to Mr. A. After selling to Mr. A, I'll draw an invoice. Okay. So what I did, I started my day today at 10 o'clock and I sold to Mr. A, Mr. B, Mr. C, Mr. D, Mr. E, Mr. F. ऐसा करके what I did, I sold to somewhere around 10 people. So I drafted 10 sales invoices. Now tomorrow morning accountant will come and I'll give him those 10 invoices. What he'll do, he'll record those transactions. Recording transactions are nothing, but how he'll record in the primary books in the form of journals. So the first step in accounting cycle after identification of transactions happens to be recording of transactions in journal, followed by their posting in respective accounts in the ledger. So very first step, journalize your transaction. Journal, record it in the form of journal. Journal is the book of original entry in which financial transactions are firstly recorded after their occurrence in chronological order. What is journal? Journal is nothing but a book of original entry. It is recorded, it is a financial transaction recorded in a chronological order. It is in this books of accounts where transactions are recorded in the first place. It is the books of accounts where transactions are recorded in the first place. The very first place, suppose I want to record a transaction, it will be journal. What is the meaning of journal? The word journal means a daily record. Journal is derived from a French word jour, which means a day. So daily, whatever transaction happens, we record. So suppose if I pay to my accountant that please take 10 rupees or 25 rupees or 100 rupees or 1000 rupees and go have a cup of tea or have something. So that refreshment expenses also I'm supposed to record. So smallest expenses or smallest income also I'm supposed to record. Daily, on a daily basis in the books of primary entry or books of first entry. The process of recording transactions in the journal is called journalizing, and this is final activity that a bookkeeper performs after identifying. So this is the very first activity. Sorry, I misread as final. This is the very first activity which bookkeeper needs to perform. Bookkeeper means the person who maintains accounts, owner. He needs to perform very first activity, and that very first activity is nothing but related to my journalizing. The entry made in this book is called journal entry, and every entry made in this book is known as journal entry, and every entry in the journal is followed by a short summary which describes particular transaction, and this short summary is referred to as narration. So after drafting a journal entry, what you do is you write a narration. Okay, that this entry is for what? You write a narration, and that narration will explain your journal entry. Okay, please give a quick read, then we'll take example of transaction and its journal entry. As per voucher number 31 of Roy Brothers on 9th Feb 2022, goods of rupees 50,000 was purchased. Cash was paid immediately. So what we did, they have taken an example here of 50,000 on 9th Feb 22. They made a purchase of 50,000. Cash was paid immediately. So it's a cash purchase. So how I'll record? Credit what goes out. Whatever happens, you have to credit G. G for God. You have to credit G. Okay, so credit what goes out to cash. Cash is going out. Purchases is your expense. Debit what comes in. Okay, debit what comes in. So what you are doing, you are debiting your purchases. So purchase account debit to cash. So that is done. Each journal entry is passed in the books of on the basis of some source document. Correct. So whenever you prepare your journal entry, what you are required to do, you are required to pass journal entry. Okay, you are required to pass journal entry, and when you pass a journal entry, that source document will help you to keep a record. Okay, some of the common source documents are purchase invoice, sales invoice, debit notes, credit notes, etc. The process of accounting does not end after recording of transactions in the journal. Rather, with the objective of classification, transactions are summarized and posted to respective accounts in the ledger. So, obviously, now I'll not tell you that, okay, I've summarized the transaction, so my work is done, or I've posted, so my work is done. No, you need to post, you need to take those transactions to respected ledgers. A journal entry can be simple journal entry or a compound journal entry. When in a journal entry only two accounts are affected, one account is debited and another account is credited, it is called simple journal entry. When only one account is debited and only one account is credited, it is known as simple journal entry. For example, goods worth rupees 44,000 sold to Mr. Ramesh by Mr. Rajesh. Okay, sold to Ramesh, sold by Ramesh to Rajesh for cash will be a simple journal entry, as in this case, cash account will be debited and sales account will be credited. Though they have mentioned the names, but it is for cash, they have mentioned for cash. So it's a cash transaction. So cash comes in, debit what comes in, credit what goes out. While in case of compound journal entry, at least two debits and at least one credit, or at least one debit and two or more credit items are involved. For example, journal entry for transaction, goods worth rupees 54,000. So again, they have taken one more example. Types of journal. We have specific journal and general journal. So what is specific journal? Specific journal is related to that special transaction, specific transaction. Say credit purchase, credit sales. I am talking about Mr. Rajesh only, Mr. Ramesh only. Getting a quick read till here. I'll go for special journal then. A special journal is a book of primary entry in which transactions of specific type, namely credit purchases, credit sales, return inward, etc., are first posted, are first recorded before being posted in respective ledger accounts. These are also referred to as subsidiary books. During the life cycle of an organization, when the volume of transactions increases to an extent that a single journal may no longer be adequate to record the transactions effectively, then special purpose books or subsidiary books are required for more efficient record keeping purposes. The different special journals that are usually maintained by an organization for primary recording of these transactions are cash journal or cash book, purchase journal, purchase return journal, sales return journal. Cash journal or cash book, it is a special journal which is maintained for recording all transactions. What is cash journal? Cash journal or cash book is a special journal. All cash transactions, cash outflow, cash inflow, all cash transactions. That means I make payment to Mr. A by drafting a check. That's a cash transaction. You need to record. Payment, whatever you are doing, making payment immediately in any form, that is your cash transaction or cash receipts. You need to record in your cash book. Purchase journal related to your purchases. So it's a special journal which is used by an organization to record all credit purchases. I sold to Mr. S, I sold to Mr. B, I sold to Mr. D. You need to record. Whenever in question, you no, it doesn't mean that's outstanding. No, credit purchases never means that's outstanding. So purchase journal means it's a purchase journal means whatever. Suppose I made I have purchased from supplier A. I was supposed to pay immediately, but I'm not paying him immediately. I'm paying him after a few days. Okay, so that's credit. That's credit purchase. So what the supplier will do, he will record my purchases in a day book. Okay, that I'm supposed to take this amount from Pankti. Okay, he'll record. Okay, on this day I'll take amounting to this amounting to 10,000, etc. He'll record it. So that's purchase day book, purchase journal. A quick read, then I'll go for sales journal. Then we have sales journal. Sales journal is a type of special journal that is used to record credit sales transactions of an organization. It is also known as sales book or sales day book. So similar to purchase journal, we have sales journal. Okay, all your credit sales is recorded under sales journal. Then we have sales purchase return journal and sales return journal. So purchase return journal is a special journal that is used for recording goods which have been returned by organization to its suppliers. So we have purchase return journal. So what is purchase return journal? It's a special journal that is used for recording goods which have been returned by an organization to its suppliers. Same way, special journals related to sales. Here we record sales to the sales done by customers. Then we have bills receivable journal is a special journal which is used to record details of bills of exchange received by an entity from its customers during an accounting period. It is also known as bills receivable book or bills receivable day book. Then we have bills payable journal. It's a special journal which is used to record details of bills of exchange accepted by an entity towards its suppliers during an accounting period. It is also known as bills payable book or bills payable day book. Then we have general journal. This is the book of original entry in which those transactions are recorded for which no specific day book is maintained or it is recorded. This is the book of original entry in which those transactions are recorded for which no specific day book is maintained or recorded. So general transactions, say printing expenses. So for this printing expenses, I don't have any specific book. Okay, then what I do, I record it in general journal. Cash journal or cash book. Cash journal or cash book is a special journal which is maintained for recording all transactions which involves cash, whether cash inflows or cash outflows. In this book of original entry, transactions of every type are entered. This journal records the details of each transactions effected in cash by an organization. Such details include the date, particulars, voucher number, ledger folio, and amount of transactions. Then we have purchase journal. Purchase journal is a book of original entry which is meant for recording recording credit purchases of goods. It is also known as purchase day book or simply purchase book. It is to be noted that cash purchases of goods are not recorded in this day book. Also, purchase of other long-term assets on credit does not find place in purchase day book. So that's purchase journal. We have cash journal or cash book, purchase journal. So cash journal or cash book is nothing but related to transactions related to cash inflow and cash outflow. Then we have purchase journals. Purchase journal means transactions related to purchase book, purchase day book, cash purchases, cash sales, credit purchases. Okay, that purchase also purchases of other long-term assets like equipment, furniture, machinery, etc. on credit does not find place in purchase day book. You'll get a question. You'll get a question that furniture is purchased on credit and that credit purchase of furniture is entered in purchase journal. No, not allowed. Only purchase of normal stock. Okay, if I'm dealing in water bottles, purchase of water bottles on credit is allowed in purchase journal. Purchase of equipments, furniture, machinery on credit not allowed. They don't find any entry in purchase day book. Format they have given. Source documents for entry in purchase journal. All entries in the book are made from the purchase invoices. Correct. A purchase invoice is a statement which is issued by the seller of goods to the buyer of goods, reflecting the details of goods like the date of purchase, quantity of purchase, rate per unit, total amount, and also the terms of payment, if any. So we have posting, we have purchase invoices. So from where we post entries in purchase day book with the help of purchase invoices. Purchase invoices becomes our source document. Posting from purchase journal to ledger. So purchase journal being a book of original entry, transactions entered here are thereafter required to be posted to respective ledger accounts in the ledger. The total of purchases made during a period is posted to purchase account in the general ledger, while the individual credit purchase transactions posted in the personal ledger accounts of respective supplier. So posting from purchase journal to ledger. Then we have sales journal. Sales journal is the book of original entry which records credit sales of goods. It is also known as sales day book or simply sales book. It is to be noted that sales of goods for cash are not recorded in this day book. Also sales of other long term assets like for equipment. So similar to say purchase journal, normal sales are recorded, sales of goods is recorded, sales of equipment, credit sales of purchases don't find any entry in this book. Okay. Then the format, source document for entry in sales journal. Source document will be sales invoice. There it was purchase invoice, here sales invoice. Quantity, date, name of supplier, rate per unit, all the details I'll get from sales invoice. Posting from sales journal to ledger. Sales journal means a book of original entry. Transactions entered here are thereafter required to be posted to respective ledger accounts in the ledger. The total amount of sales made during a period is posted to sales account in general ledger, while the individual entries of credit sales are posted in the personal ledger accounts of respective customers or debtors. So that is posting from sales journal to ledger. Then we have purchase return journal. So purchase return journal is a book of original entry which is meant for recording returns of goods purchased on credit from suppliers. It is also known as return outward day book. Return outward, whatever comes inside that is going out. Return outward. It is to be noted that returns arising out of cash purchases of goods or return of any asset other than merchandising goods on credit does not find place in this day book. The purchase return journal records the details of return arising out of credit purchases of goods, namely date of return, particulars of items returned, name of supplier, debit note number, ledger folio, and total amount. The format of purchase return journal is given below. So here you have purchase return. So whatever you are purchasing, quantity of goods returned, of what value, when you are returning, all those things will come here. Okay, or return of any asset other than. So see, it is to be noted that return arising out of cash purchases of goods or return of any asset other than merchandising, trading goods on credit does not find place in day book. Okay, so it is to be noted that return arising out of cash purchases of goods, return of any asset other than merchandising goods on credit does not find place in day book. Very, very important line. So they are focusing only on credit purchases which are returned. Cash purchases or purchase of any asset will not find place in this book. Format is given. A quick read, I'll take a pause, then we'll go ahead. Source documents for entry in purchase return journal. All entries in this book are made from debit note issued to respective supplier or credit notes received from the respective suppliers. Posting from purchase return journal to ledger. The purchase return book being a book of original entry, transactions entered here are thereafter required to be posted to respective ledger accounts in the ledger. The total of purchase return made during a period is posted to purchase return or return outward account in general ledger, while the individual purchase return transactions posted in personal ledger account of respective supplier. So we have posting from purchase return journal to ledger. So how we post from purchase return book to that is the book of original entry to ledger, that point is discussed here. Then we have sales return journal. Sales return journal in the books of original entry which records returns of goods earlier sold on credit basis. It is also known as sales return day book or simply sales return book. The sales return books record the details of goods returned out of credit sales made by an organization during a period. Such details includes date of return, particulars of items returned, credit note number, Ledger folio. So details of sales return book is mentioned here. Sales document for entry in sales return document. It can be credit note issued by seller of goods, sales invoice. These two documents will give us details of quantity, value of goods returned, per rate per unit, amount, and also the terms of payment, if any. Posting from sales return journal to ledger, as the sales return journal in the book is a book of original entry, and so transactions recorded here are thereafter required to be posted to respective accounts in the ledger. The total amount of sales return made during a period is posted to returns in word account in general ledger, while the individual entries of sales return are posted in personal ledger accounts of respective customers or debtors. So this is related to sales return journal. Okay. So what they have mentioned here, how you are supposed to post. So see, let me summarize what all things we studied. So we studied cash book. So any inflow or outflow, the transactions which are in the form of inflow and outflow of cash, that you have to record here in the cash book or cash journal. Then you have general journal. If it will find no place in any books, then you can record in your general journal. Then you have purchase books. So purchase books are where you go for credit purchases. Credit purchases is nothing but you are not making payment immediately, you are making payment at a later date. Then you have cash purchases. Cash purchases means you are making payment immediately. Credit sales book. Sales book is again credit sales. Customer is not paying you immediately at a later date. So if you purchase any asset or sell any asset on credit, those such type of transactions will not find place on in the purchase book or sales book. From purchase book or sales book, that is the primary book of entry, you are supposed to post to your secondary book of entry, that is ledger. Okay, how you can make posting, how you can make entry in your books, normal books. You can make entry in your normal books with the help of sales invoice, purchase invoice. Okay, these are the two documents with the help of which you can pass entries. Then you have sales return and purchase return book. Now what is sales return and purchase return? So sales return and purchase return is nothing but here you are recording your returns. Okay, if you have return outward, a return outward means purchase return. If you have return inward means sales return. So you record this with the help of debit note, credit note, sales invoice, purchase invoice. Okay, so a summary of what we studied till now.